Yeah, good morning, everyone. So we saw yesterday US market coming off ahead of Fed meeting. The expectation is that the Fed will be increasing interest rate by 0.75%, and that is given. And the key thing to watch will be what will be the comment from Fed in post this meeting, and how far they can go for increasing the interest rates in the coming year. So that will be determining factors for the future course of action for the market. And apart from that, what we see that since this interest rate increase is driven to cool off the demand scenario in the US market and to bring down the inflation. Now the impact of these interest rate increase in last 4 5 months will be getting visible even in the results also. We had seen comment from various corporates in the US about the decreasing demand and specifically for housing and all. So now, uh, when the result season start in the next month, the impact of these tightness will also be seen in the results. So overall, seems the US market may be remaining subdued in coming period. Apart from that, the impact of US market decline is also visible in the Asian market. Most of the markets are down more than 1%. So we will be seeing a similar type of impact on the Indian market as well. Apart from that, commodity oil is down by around $1. Iron ore is down by around 2.5%, and steel is down by around 1%. So overall, most of the market are showing some negative trend, and similar thing can be visible in the Indian market as well. Now, I'll request technical team to take up from here.
Yeah, can you hear me, sir?
Yeah, I can.
Yeah, so there was some issue with the Zoom app. We are just starting out now. This is Nirav here from the derivative desk. See, on the derivative side, looking at the overall open interest, 17,500, as I said, was a strong support area, and a good bounce back has been seen from there. However, the data continues to be positive even after a big fall on the last Friday. Uh, the 18,000, the 17,500 level wasn't broken. That was one. Secondly, the VIX, that did not go above the 20 levels on a closing basis, which is a very big positive for the markets. Also, the open interest has come down significantly from 1.45 odd crores to about 1.2. So that is again, a liquidation sign. So that's a good thing. We are light on open interest also. PCR is at normal levels. So all in all, the indications are positive. I believe Nifty is likely to witness a bounce, going forward. The only real hurdle is the 18,000 call strike, which has the highest open interest amongst calls. So probably, for the next couple of days, 18,000 will hold as a strong resistance on the upside. But then, probably after Thursday, you will see 18,000 being broken and Nifty moving upward. So look out for the same. The view is positive. From the stock specific front, Pharma did pretty well yesterday, and Cipla has broken out on the chart as well as on open interest. Open interest has been tremendous addition in Cipla on the long side. So this is one stock to watch out for. It can gain a lot of momentum, and it can move up towards 1150, 1200 levels. So look out for the same. Banking will continue to perform well. Open interest is very positive in the banking sector. That's it from my side. I'd like to have the technical team to take over, please.
Yes, thank you, Nirav. Good morning, all of you. This is Swati. Today, the market is likely to open with a little bit gap down as such, and we're likely to witness some sideways momentum during the day. From the last two trading session, we have seen a very good bounce back rally from almost 17,400 levels towards 17,900. But somehow it is not able to surpass that resistance level on the closing basis. So, which gives some sort of a cautious sign As of now, we are witnessing a selling pressure at the higher levels, at the resistance levels towards 17,900 to 18,000 levels. So as long as Nifty doesn't surpass that resistance zone, we are not likely to witness more positive momentum into the market. Whereas on a downside, the immediate support is placed at 17,740. Any move below that level on the closing basis will extend the fall towards 17,600 to 17,540 levels on the downside. So the view will remain positive, but yes, definitely on high side, we are witnessing some selling pressure or say the profit booking. So be the stock specific rather than concentrating on the Nifty or the Bank Nifty. Coming towards the Bank Nifty, 41,730, 42,000 levels are the immediate resistance level for the Bank Nifty, whereas on a downside, 41,250 and 41,000 will act as a crucial support level for the Bank Nifty front. Coming towards the Nifty Finance Services, 18,870, 18,980 will be the resistance zone for the Nifty Finance, whereas the support is placed at 18,620. Any move below that level, we are likely to witness fall towards 18,500 to 18,440 levels. Coming towards the stock specific, since the Bank Nifty was really doing very well from the last two to three trading session, so the banking front, Federal Bank really looks very good. Uh, as of now, it is trading at near 123, 124 levels. The weekly chart shows that the stock is on the given a breakout and it's leading towards to 130 to 135 levels. So one can take a long position into the Federal Bank with a strict stop loss of 120, but it will be a conditional buy call above 124 itself. I think that's it from my side. I request fundamental team to take a call forward.
Good morning. Central Bank of India has been taken out by the RBI from PCA, that is Prompt Corrective Action Framework. So basically under PCA, the remuneration of top management is freezed. Also, bank is not allowed to open new branches, and there are few other restrictions. So all those restrictions will be removed now. So it will be positive for Central Bank of India. Also, in another news, Kirloskar Industries, which is a co-promoter of Swaraj Engines. So Swaraj Engines has Kirloskar has proposed to sell its entire stake in the company to co-promoter M&M. So Kirloskar will offload 21 lakh shares or 17% stake at a price of 1,400 rupees per share, totaling to almost 300 crores to M&M. So M&M shareholding in Swaraj Engines will now increase from 35% to 52% after the acquisition. So it will become a subsidiary of M&M, and as it is, it was getting good orders from M&M for its tractor business. So now it will give more comfort to Swaraj Engine shareholders, and business can only improve from here. Also for Kirloskar Industries, which is actually a sort of holding company for the Kirloskar Group, and also it is a promoter for Kirloskar Ferrous. So market cap of Kirloskar Industries is 1,600 crores, and this transaction itself will give it 300 crores of cash. So it is positive for Kirloskar in a short term also. Thank you.
Good morning, everyone. Just a small update. Infosys bags Telenor Norway IT modernization deal. Size of the deal is not known. However, this is positive to Infosys. Thank you.
So there is a rumor that Triveni Engineering will be selling around 11% holding in Triveni Turbine. In fact, in all, Triveni Engineering hold around 21% of Triveni Turbine, and the total value at current CMP will be around 1,500 crores. So the rumor is that the 11% they will be selling into the market, and 10% may be acquired by the promoter directly. So in all, it can, if it goes through and happens, then it can generate around 1,500 crore rupees for Triveni Engineering. And current market cap of the Triveni Engineering is 6,500 crores, and the debt is around 1,500 crores. So post this cash generation, quite possible that Triveni Engineering can become a net debt free, and the valuations will improve to around 10.9 times EV by EBITDA on a trailing basis. whereas Balrampur Chini is at around 14 times, and the other smaller companies are at somewhere around 8 times. So there will be some positiveness for the Triveni Engineering with this transaction if it happens. So, now I'll hand it over to commodity team.
Yeah, thank you, sir. Good morning, everyone. Yesterday we witnessed dollar index rising again. Overall commodity was under pressure. Today also, as tonight after our market close, Fed meeting is there. So again, that could lead to a rise in dollar, and we may see commodity correcting. So overall view for the day will be strictly trade with intraday and do not carry any positions. Gold one can sell around 49,300 levels with a strict stop loss of 49,500 and cover around 49,000, 48,900. Silver one can initiate a long with 56,200 with a small stop loss of 55,800. Prices can test 56,800 to 57,000 on higher end. Crude oil, one can expect range bound movement from 66.50 to 68.50. So one can sell around 6,800 with a stop loss above 68.70. And in copper, one can witness range bound movement. So unless 640 on downside and 654, these are acting as a support and resistance area. So for a trading purpose, one can sell around 50 with a stop loss of 654. And natural gas, one can expect a bounce back. A pullback can be witnessed. So one can buy with a small stop loss of 613. Again, prices can test 630 to 33 on higher end. That's it from me. Ria can take over from here.
Good morning, everyone. On the currency front, dollar index, like Sir said, has risen above the 110 levels and is trading above the same. One of the major reason is the anticipation with respect to the Fed rate hikes. So, on the Fed rate hikes front, we are expecting Fed to go forward with the rate hike of 50 to 75 pips, taking the interest rate towards 3 to 3.25% band. There won't be 100 bips rate hike because firstly the inflation though have come more than what was expected, it is still on the downside if you compare it month on month basis. Secondly, there is a global turn down risk led by Europe and China. So that risk has actually escalated, and of course all the rate hikes and monetary tightening that the Fed has taken, the lag effect will be visible into their economy for within a period of 6 to 12 months. So a lot of monetary tightening could already be in the pipeline towards that. So we are expecting 50 to 75 bips rate hike. For the pound, there is an escalated speculation that Bank of England may go forward with a 75 bips rate hike rather than a 50 bips rate hike. So the reason is that the pound has fallen quite a bit against the dollar and is losing strength. The market has already discounted a 50 basis rate hike. Why there won't be much difference onto the pound side and why the strength will deteriorate is because there is a lot of borrowing that the government has to do in order to fuel the energy cap that they have announced. There is also another support that they will be giving to the economy in order to control the cost of living, which is said to amount at around 150 billion pound. So a lot of borrowing put an effect on their current account deficit, and thus can pull down the sentiment as far as the economy is concerned. For the USD INR, the market has opened on a depreciating side towards 79.85, and I think it will remain within the range of 80.25 to 79.60. That is the range that you can see. Go long above the level of 79.95 for the target of 80.15, 80.25. Maintain a strict SL at 79.70. So that's all on the currency front. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.